this on a full-time basis. I really want to do it on a full-time basis. I really want to do it for a long time now. I've worked for Jackson Hewitt and H&R Block, and I enjoyed that. I also worked, when I was in college, I worked for a CPA, inputting the information for him to just calculate it and send it on, making the big bucks. So I was like, I need to do that for myself one day. That's what I was thinking then, but that was years ago. But now I'm at a point where I can probably, hopefully, do it for myself full time. So that's where this is going. So I put together this PowerPoint for you all, and it's mostly about top 10 deductions that people ask about most, and that they've asked me about sometime over the years for people starting business, because I'm trying to get over into the business side of tax. I still want to do individual taxes, but I'm kind of trying to move over to the business side because I'm starting a business, and a lot of you are probably starting a business or have businesses. So I want to help out, and the Combat Booster Red Bottoms Business Bootcamp really gave me that oomph to make that jump to go ahead and do everything that I need to do to get my business started and get everything off the ground. So I am married. I have 2 young kids. They are, right now, they'll be 2 and 4 next month. So I'm gonna go with the age they're gonna be now, because they're already acting like they're older than what they are. And I also have a stepson. I am a volunteer at the local care lodge here in Meridian, Mississippi for domestic violence, and the Mississippi Children's Museum, because of course my kids want to go there every weekend and every day of the week. So I had to become a partner with the museum because it was only fitting. So without further ado, I guess I'm gonna start the video, and I'm gonna let you know about our scope and our services. Like I said earlier, it includes 10 business tax deductions that are commonly missed when completing your small business income taxes, and it's just an overview for familiarization. So this is a familiarization to let you all know that, oops, it's something I missed. If you were already in practice or anything with your business, like I missed that last year, or I make sure I get that this year. So I don't want to dive too deep into IRS lingo or tax lingo. I just want to throw out the business deductions, and at the end of this presentation, my information at the end. If anyone wants to have a consultation or talk about their business or their taxes or what they can use, I'd be open for that. There are certain, here we go. Okay, our philosophy is like mothers, taxes are often misunderstood but seldom forgotten. And those are my little 2 right there. So those are my babies. All right, we're going to get started with these top 10 business deductions. I got it on paper here, so I'm going to make sure I follow along over here on this side, so I won't miss telling you anything that I have to tell. So the first slide is going to be the definitions. So we're going to go over some of these definitions just to get you familiar and to understand some of the lingo that I'll be using within this presentation. So the first is deduction. Is the amount that is or may be deducted from something, especially from taxable income or your tax to be paid. So it's kind of like deducted from, means it reduces it. A tax liability is the total amount of tax debt owed by an individual, a corporation, or other entity, such as the IRS. So that's the tax liability, whatever you owe. An ordinary expense is one that is common and accepted in the industry. You'll see that a lot within this presentation, and also as well as necessary expense is one that is helpful and appropriate for the trade or business. And it does not have to be indispensable to be considered necessary. So you'll see that a lot for business deductions, because the one thing that they want to emphasize is, in order for it to be a deduction for you, it has to be ordinary and necessary. So direct expense, the expense is direct, as the word suggests, are those expenses that are completely related and assigned to the core business operations of the company. Indirect expense, unlike direct, indirect expenses are not directly related and assigned to the core business operations of a firm. These can be utilities, other overhead. And capital expense, you must capitalize rather than deduct some costs. These are costs that are part of your investment in your business and are called capital expenses. Capital expenses are considered assets in your business. In general, you capitalize 3 types of costs: business startup costs, business assets, and improvements. You can elect to deduct or amortize certain business startup costs, and amortizing is to gradually write off the initial cost of an asset over a period. And this includes in cost recovery. Although you generally cannot take a current deduction for a capital expense, you may be able to recover the amount you spend through depreciation, amortization, or depletion. These recovery methods allow you to deduct part of your cost each year. This way you are able to recover your capital expense. Well, right now, before we get into that, I want to kind of go over the difference in a deduction and a credit, because a lot of people are like, oh, why would I use deductions? Why do I use credits? What's the difference? And so deductions can only lower your tax income and tax rate used to calculate your tax. So it can result in a large refund of your withholding. And a credit reduces your tax, giving you a larger refund of your withholding, but certain tax credits can give you a refund even if you have no withholding amount. So I made up a little problem, kind of wrote it down for myself in order to try to kind of break it down to like, which one do you choose? Would you choose a $10,000 tax deduction or a $10,000 tax credit? So we'll go by, say, your adjusted gross income, which is your gross income minus your adjustments, like education expenses, loan, interest, alimony, and stuff like that. So you're going to have, in this problem I wrote out, everybody has $100,000. So we're going to go first with, if I took a deduction, what would my tax liability be? So if your AGI was $100,000, less your tax deduction of $10,000, that will give you a taxable income now of $90,000. So you took that and you reduced your taxable income. $90,000 puts you in the tax rate of 25%. And tax rates are depending on your filing status. So we're not worried about, our internet. Am I breaking up? We're not really worried about the tax rate as far as whether you're single or married right now. This is just my tax rate is 12%, and I calculated my tax to be $20,000. So that's what my tax be, $22,000. Tax rate is 25%. So if I were to take it, that would be my income. I tax rate, multiply that, my calculated tax would be $25,000 upfront, $25,000. I want 1,000. 10,000 is 15,500. I mean, yeah, no, 15,000. 25,000 minus 10 is $15,000. So $15,000 with the tax credit would be how much my tax bill is. And that's kind of sort of a rundown, show the differences between taking a deduction up front and taking a tax credit at the end. So that's how much you would get. But moving on to the very, very first slide is, the next slide is expenses. So a lot of people ask about startup expenses, the cost to get your business off the ground, get started. Business expenses are the cost of carrying on a trade or business, and they're usually deductible if the business is operated to make a profit. To be deductible, a business expense can be both ordinary and necessary. Those are two words again, ordinary and necessary. Even though an expense may be ordinary and necessary, you may not be allowed to deduct it in the year that you paid it or incurred it. That's when we will have to do some type of cost recovery, would it be some depreciation, amortization, depletion. In some cases, you may not be allowed to deduct this expense at all because it may not be an actual startup expense. So these are, therefore, it's important to distinguish the usual business expenses from the expenses that include the following. Expenses used to figure cost of goods sold, capital expenses, and personal expenses. You need to separate these expenses. So when you go into business, treat all your costs you had to get your business started as capital expenses. Just do not include any personal expenses within that. Make sure you separate things like a non-deductible expense would be, as well as personal expense would be political contributions, commuting expenses. You cannot deduct your mileage just by going to work. Now, if you get to your job and you have to go to another site or something like that, then that could possibly be part of deduction there, and not a non-deductible. Travel expenses for extra travel is also non-deductible, and capital expenses, once again, reminding you they're investments in the business to include upgrades, new equipment, and other intangible assets. All right, next slide. I got business interest. Interest is amount that is paid, received, or accrued as compensation for the use or forbearance of money on the terms of an instrument or contractual agreement, or that is interest on the internal or the regulations thereunder. Really, this is the cost of business interest that is charged on business loans used to maintain your business. And it can also include certain amounts that are closely related to interest, such as substitute interest payments, debt issuance costs, loan commitment fees, and certain amounts that affect the economic cost of funds or yields of a borrowing or an interest generating asset. And business interest expense and interest expense that is properly allocable to a trade or a business. All right, next slide. And one thing that a lot of people like to do is work from home. So most of us might have home offices. So small business owners who work from home may qualify for home office deduction. Remember, the IRS has two ways that you can figure this. You can use a regular method between the personal and business use. You can just divide expense of operating the home between personal and business use. Or self-employed taxpayers can file Form 1040 Schedule C and compute this deduction on Form 8829. The simplified method has a rate of $5 per square foot for business use of the home, and the maximum of that is $1,500. So you can probably work out the math on that one and the regular method with dividing the expenses of operating a home between the personal and business use. So and come and see which one is more beneficial to you. But the maximum deduction on that one, the 15 square foot business use, is $1,500. Deductible expenses for business use of a home include the business portion of real estate taxes. You can also deduct that, mortgage, interest, rent, casual loss, utilities, insurance, depreciation, maintenance, and repairs. In general, expenses for parts of the home not used for businesses are not deductible. Next slide. We come across bad business debt, because sometimes while you're running your business, you tend to hold uncollectible or worthless business debts, which are considered bad business debts. These debts arise when we create a credit sale for goods or services that go unpaid. In order to be eligible to claim this deduction, the debt must be partly or fully worthless, meaning you cannot recover it. Worth is based on the chance the amount owed will be paid back. Next slide. We got our salaries and benefits. You can write off the salaries, write off the salaries and benefits you pay to employees if they meet the following criteria. The employee is not a member of the LLC. The salary paid or employee accrue time of the pay period. In some cases, are in the deduction unreasonable if the employee has a degree of leverage over the insurer. This includes investors and people personal acquaintance. So you got to watch. If you want to claim this, you got to watch who you hire. You don't want to get too far gone in hiring firms because you may not be able to take this deduction because family members are type of business. And they have some leverage over you, and you don't want any bad business to happen between you and the people that work for you. Next slide. Well, the next slide is for rent.
Montoya, can you go over the salary?
Am I messing up?
No, you're good to go, but your signal went out on salaries and benefits. Oh. Can you summarize that again for us?
Oh yeah, the employee, when you're claiming this deduction, please be sure and be mindful that the salary that you're trying to deduct, the employee salary that you're trying to deduct as an expense is not a member of the LLC that you have or your whatever type of business NC you have. The salary is reasonable and necessary, like once necessary, and the employee actually accrues the time for the pay period. So just make sure you don't have any conflicts of interest between the people that you are trying to get this deduction from. Because if you hire a personal acquaintance or anyone that invests in your business and they also work for you as well, then you can have it'd be some bad business going on. The IRS is really a stickler about whether or not these people are people that you have personal acquaintance with or investors or if they have any type of leverage over you. Did it stay? Okay, the next one is rent. So business owners that rent buildings, office space, warehouse, or other type of business property may be able to deduct the rent expense if the space meets eligibility standards, which states that the property must be used for business purposes in order to be written off. Now, about the rent, this can also go for home office. Even if you rent your home and you have an office inside the home that you rent, you can still claim a part of that rent and for a business deduction. So you eventually receive equity. Now, if you are renting a space and it's like a rent to own type deal where you're going to eventually receive the title, but you're paying rent right now, you cannot take this deduction. And you don't want to, you don't want to get caught up in the IRS, caught up with the IRS if you decide to take this and you end up owning the property or you get the title. Like I said, you can, was the number 3 about home office, and that refers to the rent, calculating your rent. The rent, how much rent is deductible, also for home offices. All right, next slide. Okay, moving expenses. If you are moving to a new city or state, direct expenses incurred may be eligible for tax deduction. Eligibility includes the costs associated with transporting business equipment, supplies, and inventory that are typically deductible. What she said, I see a question. When you own, you can't, we'll come back at the end. Eligibility includes the costs associated with transporting business equipment, supplies, and inventory that are typically deductible. So moving, I recommend that you do your move, because most time if you're moving to another city or state, mostly if you move to another state, probably, it depends on where the city is as well, you're probably moving your home as well. So please move separate, keep everything together separately so that you won't have to try to remember, now, did I use this for my business or did I use this when I moved my house or in my home? So you'll know what you're supposed to use and what you're not supposed to use. You won't have to go back and redo any tax forms for any years that you, that year that you claim the wrong deduction. All right, next slide. I know everybody that is doing advertising in some form of marketing. The tax law allows business to deduct expenses that help them bring in new customers and keep existing ones. These costs may include expenses for advertising and marketing. The advertising and marketing expenses must be ordinary and necessary. Costs that are considered primarily personal are exempt from a deduction, even if they have some promotional value. So anything that is for your business is deductible as long as it's ordinary. Anything that is personal, as long as even if it's promotional for your business, but it's personal, then you cannot deduct it as advertising and marketing. All right, next slide. All right, everyone uses the phone and the internet for some form of fashion for their business. So internet and phone service business can be written off to lower small business owners' tax liability. Phone and internet usage, if essential to the operation of the business, can be fully deductible. So it's kind of tricky when trying to write that off a portion, because if you're using the same internet service for your home Wi-Fi and business Wi-Fi when you're working from home, it can get into a lot of calculations trying to find out what day did I use it, how long did I use it, and trying to factor up the cost of how much should be for your business and how much should be for your home. So and again, I probably keep it separate. I'm pilling around with that, or not claim it at all. If you can't keep it, if you can't separate it, then don't try to claim it. That's the best advice. If you can't separate, don't claim it. Just use it for your home, because something might come up, and we don't want anything to happen with your with filing your taxes. Next slide. Travel expenses, trips, once again, they are considered ordinary and necessary, and to a destination away from the taxpayer's residence state can qualify as business travel. That includes meals and lodging. Vacation expenses are exempt from the tax deduction. So the IRS, this is what the IRS says qualifies as a vacation, so to speak. So a trip where the majority of days away are not spent doing business, and a business trip that can't be verified through correct documentation. So if you cannot verify that it's not a legitimate business trip, then you can't claim it. And if you have more days out there vacationing or in the pool or wherever you are instead of handling business, then it cannot be deducted. Okay, and the next slide, I was going to put some more references on here, but what better reference to put with the IRS, because that's where it's coming from, that's where you get it. And a lot of times I have to read some of the stuff in the IRS 2-3 times to make to understand it, to make sense of it. But it's kind of, some of it is straightforward and some of it is not. So you'll need someone to probably decipher that for you. Next. And who better to decipher it than us? See, she's even giving you numbers. For all your business tag needs, reach us. You can reach us through the following: Facebook, email, and my website. Send me an email. I check the email every day. The website, I know I get a message from the website, and Facebook too. And also you can purchase the book. That's my website. You can purchase the book. It's listed on the website. So do we have open the floor for some questions? I know I had some typing down at the bottom.
Okay, I got two questions that have come in. One was from Key. She asked, hers was in reference to rent and mortgage. Okay, rent or no, it was in reference to mortgage. When you discuss that, she wants to verify that when you own, you can't use that as a deduction, like your mortgage. Is that, hopefully I got that question right, Key. Let me know if I was on the right track with that.
Yeah, that's right.
Okay.
Yeah, your mortgage is deductible. As far as business usage, like, you know, when we went over the rent, it's the rent part that a lot of people get. It says, like, when you will eventually receive equity in or title to the property in question, you can't claim the rent, because a lot of people, they'll rent to own it. So if you're renting and the goal is you're going to own it in a few years, because they make you sign that paper saying you're going to eventually own it, you're going to eventually have a title for it, then that's for the rent part. But as far as the office space, what was that, number 3? Okay. Yeah, deductible expense for business use of a home include business portion of your real estate, the mortgage interest, all that can be deducted if you can separate those expenses and calculate your usage, so to speak. And I think the IRS has more. Hold up, my battery. I'm sorry, hold on, my battery says running low.
You good? We good?
Okay, we good now.
Okay. I think one of the things was, as far as the mortgage is concerned, does that go by the square footage of your office on what percentage of your mortgage that you can write off for your taxes?
Yes.
Okay.
Yes. Yeah.
All right. Did that answer your question, Key?
Yes, it did. Thank you.
You're welcome. Another question that we have is reference to bad debt. There's a reference to bad debt. Let me find that slide. Bad business debt. Bad business debt. And that is when you, how do you, one of the things you had mentioned is that you have to prove to the IRS, well, you have to prove when you're filing your taxes, if you want to write this off, that you have tried to collect the debt. What are some ways that you can approve? Oh, that's okay. Yeah. Carol, I'm gonna repeat it. For bad business debt, how do you prove to the IRS if they're asking, or in order to file this, that you have tried to collect the debt?
Okay, so first, it has to be included in your income. Like, you made the sale, you included it in income, or when you made the loan, or when you loaned out your cash, you included it as it was going to be income to you. And you have to be able to show the time of the transaction that you intended to make a loan or sell. It wasn't a gift. That alone, if you're making all the necessary transactions that you need to make, or sending out your letters, reminding them that they have to pay, you can then, mostly, if you don't hear back from them, probably in 30, 90 days, it's more likely going to be a business debt, because they probably won't pay it. Okay, and you can claim it as such.
So you don't have.
You just have to have claimed it. Yeah, you have to have claimed it as income to you. Like, you have to have put it on your you have to put it in within your income.
Okay, so if we send an invoice out or something like that, that is something where you have proof that they have ordered something and they have a pay by date, and you send late reminders to pay this debt, then that's a way of proving to the IRS that you have tried to collect this debt. So you don't, I guess one of the questions would be, so you don't have to incur even more, pay even more expense by, sending it to a collections agency. You don't have to go that far to prove it, right?
No, you don't. Because as long as you have included it in your income and you send out the invoices and told them, hey, you owe here, and they don't pay, and that's most of what they're looking at as far as that you it wasn't a gift.
Right. Okay.
It wasn't a gift. You just didn't give them this, and they, now you're saying that they owe me.
Okay. Carol had missed the original question. Carol, the original question was reference to mortgage. Someone had asked, wanted to verify that they couldn't write off their mortgage in order, on their taxes when they had a business. Well, if you have a home, the answer was, if you have a home office where your mortgage is, where your home is, then it's based on the square footage of your office. And they will take the percentage from, they'll compare the percentage of your overall mortgage to the size of your office. And that's how you will be able to file that on your taxes. But you won't be able to write off your whole mortgage because you're not using your whole house for a home office. Did I get that right, Montoya?
Yes.
Okay. All right. Do we have any other questions? Any questions at all, please let me know. If you don't want to ask them, you can send a message. You can send me a direct message also. I will ask them for you. Oh, I have a question. Vacation. You mentioned that we have to make sure that there's nothing wrong with, just to clarify, there's nothing wrong with going on vacation while you're doing work.
Yeah.
Sort of like in the military when we go to, we go TDY in conjunction with leave.
Yeah.
Okay. So when they send you to a school or something, and then you take 30 days leave afterwards. So it's kind of like a situation like that, but you have to have, when you can't spend 2 days, 2 days doing a presentation or meeting clients, and then 30 days, on some island. They will frown on that, right?
Yes.
Okay. There was an old saying that you go on vacation, if you pass out your business card, it counts as a business expense. I remember when I first started getting into business. Yeah. So me didn't know what I was doing when I first started my business. I was in the military. I started my promotional products company. And I made these business cards, and I was like, I am going on vacation. So I went to Canada, and I was like, hey, here's my business card. so ladies don't
for a few hours a day.
Yeah.
For an hour or two.
All right. So we got another question that came in. Oh, this is a good question. If two really good questions. It might get into the weeds, but one of the questions is, do we have any breaks as teachers? Do teachers have any, that you can remember right off the top of your head? Are there any type of tax breaks that teachers may have for business, if, just as being teachers?
Expenses, but I think their expenses, they have a limit. I think it's 200, because I have a I think it's $250 out there.
$250.
I don't know if they're taking it or not. I think it's $250 because I had a teacher that I was doing her taxes, her and her husband, and she would always give me her classroom expenses and stuff like that. And she'd be well over, and she has stopped keeping the receipts. She was like, it's just not even. I said, you sure you don't want your deduction with the two? It's not. You're spending $500 in a class. and we only giving you half of that. So I mean, you have to meet that threshold to claim it. Anything over is,
you have to just like eat it, right? Okay.
So she just rather eat it instead of trying to keep up with receipts that's not even going to amount to what she paid. I was like, yeah, they don't do enough.
Okay, I see what you're saying. All right.
Yeah, they don't do enough for the teachers, so she gave up.
So what about 100% disabled veterans? A lot of us in the community, have a disability rating. And are there anything extra being 100% disabled veteran that we can file on our taxes when we have a business?
Because I know it's a whole bunch of business deductions. I didn't really see anything as specific to veterans and disability, but I can look into that because I mean, I'll be filing my stuff, so I'll probably be, trying to figure it out. Because I don't have any. I have a guy that I'm trying to help here, and he has some stuff, but he hasn't gotten his business started. I don't look into it. I like ask a question about it, or it's something that happens to me myself. Look into it so I can spread the word to everybody else. So yeah, that's a good question. That's something I need to look into too, about being a veteran. A lot of stuff out for veterans and that run business. So it's probably something there. I'm gonna check on that. I'm gonna check on that. I'm gonna check that, and I'll post that on the website if there's anything.
I was in the process of doing a welcome. Okay, so are there any other questions that you ladies want to ask? We went over the top. We didn't want to go over all the deductions that you guys can get, but we did go over the top 10 that you can actually take. So if it's anything that you guys have any questions on, go ahead and ask us now, or you can send that to us, or I'm going to post this video in Combat Boots to Red Bottoms. You can always post your questions in there. Montoya is a Combat Boots to Red Bottoms member. I'm going to bring up the slide again. How can you not go to her website? Look at this cutie pie right
look at that face. Look at that face.
And she's doing the numbers at that, okay? So I love that. I love that. So that's a good marketing strategy, Montoya. So, yes. Oh, I got another question in. The type of business that people have. Okay. One of the questions that we have that came in is, I'm curious about the type of business that people have that might make a difference in the deductions. Like, do you see more deductions in one business than the other?
Some people can take most of them. And then it's differences. Like I have a truck driver, so he can't take the office, like that. So it's still it's different because I have right now 2 people that have business. I have one that has like I said, a truck driver, and I have one that has she does, oh help me out, party planning.
Okay.
And so her big thing is that travel and the mileage and things like that. She claims that like all the time. She's always out constantly getting stuff, picking up stuff and all that stuff. So she has a lot of that. So it all depends on the type of business and what you're doing. And it also depends on whether or not you're a LLC or a corporation, whatever you registered as, what deductions you can take and how you can actually take them, because it's a difference. Like the business debt is different for corporations and LLCs and stuff like that. So it's a lot involved in down in the weeds of what it is. It's just the surface right here. Then when you get into it, you're like, no, you can't take that because this. So you really have to, you go in like, I want to, then like, no, that doesn't really necessarily apply to you because you have this or you have that.
Right.
So yeah, it's a with the IRS and with the tax, it's just you have to dig deeper in order to figure out whether or not you can actually claim it, because everybody wants to deduct something.
What about what about when it comes to the industry and deductions? I know you just got the top 10 and this is the tip of the iceberg, so there's a whole glacier up under there, but have you in doing taxes, have you seen, is there a difference between the product industry and the service industry as far as the advantage of deductions? Is there more deductions when it comes to products versus services? Or is there, it just depends on each individual business?
I guess it depends on these two, but a lot of the product industries, I see they have, because they can do more. They can do cost of goods sold. I mean, they can do a lot more than what we can do as giving out service or service business. And they probably take a lot more, because I was wondering, because I know a lot of service business always try to find a way to have some type of product to sell, because that kind of, gives you different deductions to take. But yeah, it kind of depends on the business and what they're selling, the purpose.
One of the things that came in was about documenting expenses. One of the ladies has a bookkeeper. And so that bookkeeper gives her a report at the end of the year that separates all the expenses, but she has to pay a monthly fee and additional price at the end of the year for the report. So is there any advice that you can give as far as documenting your expenses? Because some ladies are just starting out and they just don't have the money to afford a bookkeeper like that. A lot of people think, hey, just because you have an accountant that you're good, but no, a lot of times you have to pay for an accountant as well as a bookkeeper. Lord, I know that. So to stay out of jail. So, so do you have any advice for the ladies when it comes to documenting their expenses?
What I do, since because it's kind of, it's not hard for me to speak to to figure, but what I did was I bought one of those the income and expense books, and Lord, I try. I'm probably the worst. I'll just put it in but then I know what I'm looking at and what I'm looking for. But I write down my expenses.
For somebody who is
those books, those books like that. Matter of fact, it's coming and it's on Amazon.
You're breaking up.
What about now?
Okay, you're good now.
It goes by month, and then they have some that goes by like my weekly expenses. What I'm doing, and then the weeklies are divided into days, and you just have to figure out which one, how far down you want to be able to track it or keep up with it. So can you deal with putting everything somewhere in a case or whatever and then going through it and then tracking it that way, or you're the type that has to do the daily tracking? Because I mostly use those books, any kind of book that is the income and the tracking, and write down my income, how much I made, what I sold, and how much I spent. And then I try to track all my expenses by writing them down, like the things that I know I have to pay every month or every year, my yearly stuff, and I'll just have them in the back because I know that they're going to be the same price every year, and just make sure I include them.
One tool that is really, really helpful is Quickbooks. Quickbooks is really helpful when you're just starting out, and if you're computer literate, and that's a suggestion that one of our ladies, Amy, had, That is, for people who are computer literate, for those who do not like being on the computer, I don't think there's a way of getting around it. Not in this day and age. Everything is going to computers, to include your medical stuff. And speaking of medical, a lot of our ladies are solo entrepreneurs, okay? And they have their own business or they're just starting out. So what advice do you give, or what have you seen when it comes to medical deductions? I know that's one thing that wasn't discussed, but what about, medical premiums and things of that nature? Can you deduct those?
Yeah, that's one of the business deductions as well. I just didn't put that one. I didn't put that one. I saw that one on there, but nobody has never asked me about that one. So I put one. Everybody always asks, like, forget about the medical side, or they already have insurance, or something like that, and they're not deducting it, or they don't ever think about it. But it's mostly what you pay, and you can deduct, your employees if you have employees. You said so it's that will probably go on their regular tax. I know about employees.
Your Schedule C.
But employees. If you had employees, would affect. Yeah.
My accountant, I remember a conversation. He called me and he's like, "Where is your medical stuff?" And I'm like, "What are you talking about? My medical stuff?" So this is one of the things. One of the challenges of wearing so many hats. I know you ladies are wearing like multiple hats. When you start your business, you're the CEO, you're the CEO, you're the CFO, you're the medical person, you're logistics, you're everything. So it's really tough to kind of balance out everything. But one of the things that I remember my accountant calling me and saying, "Where is your medical stuff?" And I'm like, "Why would you send you my medical stuff?" And he's like, you can take that off. And he said, "You can deduct that." And I was like, "Duh." He was like, "Duh. Did I teach you any better?" So, and I'm gonna tell you, it's good to have an accountant or bookkeeper or people who are going to tell you like it is. I would tell you this, my accountant stays in my butt all the time. He's like, the most frustrating thing is he's like, "Stop giving away stuff." He's always telling me that, but he's always like, you didn't take this off. You didn't. He said, so he said, "I'm sending my bookkeeper over there to you. So, I'm gonna connect you with my bookkeeper." So that's when I realized the value of a bookkeeper. So I know you ladies are out there. A lot of times you think that you're doing it by yourself. Okay. But you're not. That's one of the reasons that we have Combat Boots to Red Bottoms, because if it's something that you guys need, or you have a question or something like that, I try to make sure. I can't answer all the questions. I'm not the subject matter expert for everything. I'm not trying to be the jack of all trades and a master of none. Okay. I had to learn how to delegate. I had to learn how to outsource. And that's pretty hard for my personality because I'm so used to taking care of everything. And that's one of the things about us in the military, us military ladies, that's what we do. We take care of everything. We're like the 20-armed monster that has everything in our clutches. Like, okay, I got this. I got to take care of this. I would tell you this. I remember, I'm going to tell you guys this. I'm going to tell you the story. And I want to know if you ladies relate. I remember being in a command and staff, and I had to brief. Okay. I had to brief the commander on all these different programs. So I had my job, but I also had everything else. I was like a fire marshal. I was like the EO, consideration of others, extra duty person. I was retention. I was the event coordinator. So I planned all the events and everything. And I remember new sergeant major came in. He was sitting in command and staff with everyone. And it was his first briefing that he was sitting in. So I'm sitting at the end of the table and I have this cart. And back then, we had these big binders for everything. So I stand up to brief. One of my slides come up and I grab a binder and I'm briefing. Then the next, section comes up, and I grab a binder and I'm briefing. And I grabbed another binder and I'm briefing. He said, stop. He said, how many damn jobs do you have? He was like, so.
Did you sit down?
So he was like, she has to get rid of some of these additional duties. But me, I'm like, oh, I can do it. I'm happy. I was just happy being of service. And I know a lot of us have gotten into that groove when it comes to our business also. So I want to encourage you ladies to actually, if you hear that, that's my little bird clock. But I want to encourage you ladies to reach out, even if you don't want to reach out in the group per se, reach out to Combat Boots or Red Bottoms, reach out to me. And a lot of times we can connect you with the subject matter experts that's going to help you. Okay. Because your success is our goal. It really is. So the classes that we offer, the training that we offer, a lot of it stems from the questions that you guys send in. And, for example, our affiliate marketing training, we have some super great ladies that would be killer in the affiliate marketing arena, but everyone thinks it's just so passive. It's a semi-passive industry. And we want to make sure that you have the foundation first, right? So closing out, do I have any other questions for Montoya? And if you have questions that you forget to ask during this presentation, or you didn't feel comfortable asking, or you think something later, send them to me and I'll make sure that she gets them, or send them directly to her. She's one of your sisters in arms. She's in Combat Boots to Red Bottoms. And it's really cool to see her do this, because I remember when she was taking our business boot camp class, it's just amazing. So she was sweating it out. It was very intense. We lost quite a few people because it was literally a boot camp. So
I was like, it's gonna happen. It's gonna happen this year. It's gonna happen. I told y'all it's gonna happen.
I think we gave away $500 or $1,000 during that boot camp. I believe so. And that brings me to another thing. We have the grants for greatness. We give out $1,000 every year. If you guys aren't interested in applying for grant for greatness, please share it with as many people as possible. I love reading what you guys submit. And a lot of times, when we get together, we add different stuff. We might open it up to other opportunities for people. This is how I learn what you ladies are doing. And if it's something that someone we can connect with you in a particular industry that will help, you might not get the grant, but you might be connected to a person that can help you, further your business. All right. So I appreciate Montoya. I always want to call you Montana.
I've been called it Montanya.
I really appreciate Montoya taking the time out of her Sunday to give us this presentation. I'm very proud of you. And I thank you ladies for joining us, because you could be anywhere else and you chose to spend time with us. And I know this is your downtime. So I really appreciate you. I love you all. Thank you for attending, and send me your requests, ladies. You guys have enjoy the rest of your weekend.
You too.
Thank you.
Love you guys.